Hello and welcome to this LinkedIn Live. I'm Pauline Egan, a director of Springboard Future. Springboard Future is a daringly different virtual coaching company, and we specialize in offering top quality coaching to middle management and leadership teams of fast growing companies using our bespoke platform. Joining me today on this LinkedIn Live is Asher Ismail. Asher is one of the co-founders of Uncapped, a company born in 2019, so very recently, that is providing an alternative funding model for growth companies. And it's really attracting a lot of attention among digital entrepreneurs as it operates in the SaaS and e-commerce and other growth spaces. Welcome, Asher. I'm really delighted to welcome you this morning.
Oh, thanks so much for having me. Really looking forward to the discussion.
Very good. So I forgot a few housekeeping notes. So let me just tell you that there's an opportunity to ask questions in the comment box. And if we don't get to answer those during the conversation, we'll be sure to follow up afterwards in the comments. But for now, let's go ahead and get started. So Asher, can you tell me a little bit more about what Uncapped is?
Sure. Well, at Uncap, what we're really passionate about is that founders shouldn't have to give away equity in order to fund their growth. So we provide fast, flexible funding to e-commerce and SaaS businesses for marketing, inventory, or hiring. But the key thing is that we do it without personal guarantees or dilution.
And what prompted you and Peter to set up this business back in 2019?
Well, Uncapped is really born out of the frustrations I faced when I was like launching my first business. That I started my first business in 2003, and I was young and I was just trying to raise 100K. And I probably had 100 meetings and got 100 no's. And I didn't want to take financing from the banks because they all wanted personal guarantees. And venture capital, it wasn't ideal either because I didn't have a track record or connections or warm introduction. And so I just repeatedly missed out on growth opportunities. And then when I was raising money for my second business, I thought I had it all figured out and I raised, millions in venture capital money. But then I also got terribly diluted. And I just started to realize that the options for me were really limited. It was just depressing to think that I could work so hard and own so little of my company. But what I also noticed, it wasn't just me. My friends are also founders, and I really noticed that growing businesses were just often left to choose between either raising costly venture capital or burdening themselves with traditional debt. And so, yeah, I just thought there must be a better way and started to work on a cap with Piotr, really first to bring a more fair funding alternative to Europe and now North America. And since we've given over 150 million of funding to businesses who've gone on to create lots of other jobs and opportunities. We've also helped those founders, own more of their business and save millions in dilution. So we're now in 22 countries, including the U.S., UK, Germany, Poland, Spain. Our business has been growing exponentially, deploying hundreds of millions, and we actually fund more businesses in a day than a typical VC will fund in a year.
Oh my gosh, I hadn't realized that at all. So, can you just talk me through the process? So, I am an e commerce business. I need money to fund my growth. How do I work with Uncapped? How does the whole process work?
Well, I guess the first thing we would say is that we're very different from how a traditional loan or a venture capital deal would work. There's no business plans, there's no pitching, there's no coffees that you need to meet us for. How it works is we connect to the data sources that you already use to run your company. So, say for example, if you're an e-commerce company and you're on Shopify, you're using Google Ads, and doing your accounting in Zero, we can connect to all those data sources and 100 other different options if other ones match you, and we get this 360 view on how your business is running. And off of the back of that, we can make a data driven decision about how much funding is available to you. And what's really incredible about that is that it also removes a lot of the bias that is normally the case, I think, in a lot of other funding options. Traditional venture capital and the way that banks have worked, they've never really been designed to like really understand, especially e-commerce businesses, this deeply. And so we're able to look at it, I think, in a new way, which also means that it's super fast because the typical process, takes less than 24 hours from the time that you can sign up to actually get money in your account.
So I think back to my old banking days and I think about the weeks we used to spend reviewing credits when I was a credit analyst. And then I look at venture capitalists and I look at the months that companies are actually spending trying to raise funding and just getting all the ducks in order, so to say, to get your funding. So this can be, I guess, realized in less than 24 hours. That is amazing.
Yeah, so we offer, investments that start from 10K up to 5 million pounds, and we just charge a flat 6% fee. And yeah, and it can be done in, a day. And I think that is incredibly important because, all that time that otherwise, as you said, you were out, trying to pitch and talk to people is time that you weren't spending, developing your products or working on your customers or developing your team. And, with this, you can, really get back to growing your business.
And is there a sweet spot in your business? Is there a sort of a typical average size of loan, given that the range is from 10,000 to 5 million?
Well, I guess the one thing we would say is that there's sort of a starting point. We'd say, uncapped is great for you if you're, generating sales for at least 6 months, doing at least 10K of revenue per month, and you're growing. That's kind of our starting point. And the rationale behind that is that, when you're at 10K of monthly sales, that's kind of the point at which your business isn't side of desk anymore. It's actually something where you could draw a salary from it. And, if you've been doing it for 6 months, it shows that actually it's something you can do repeatably and has the potential to scale. And really that's what we want to fund. We want to fund businesses that are repeatable and predictable and give them more fuel for the fire without taking a piece from the pie. And in terms of the average of who we fund, I'd say the average ticket is probably a bit larger. It's probably more around the 200K mark. As businesses, especially in Europe, we've just seen them grow faster than ever and have bigger needs of capital. But that's also skewed by the fact that we have a lot of companies who are venture capital backed and who come to us, after they've raised their first round, and then they decide they want a more affordable source of funding to help them continue to grow.
That is a fascinating angle that actually you, as a startup, can have multiple sources of funding. And just because you've done a Series A or a Series B doesn't mean that there isn't another option that is not debt before you move on to your next series. So, can you give me an example of a company that maybe has actually had an advance of 5 million, Asher?
Yeah,
What type
sure.
of
So,
company that would be?
we funded a company called Marshmallow, which is a fintech that provides car insurance for immigrants and expats. A really incredibly purpose-driven company, and they had raised from venture capital some really good VCs in the UK, but then they were looking for a more affordable alternative to help them bridge their next round, and they ended up working with us, and they saved 7.5 million in dilution from their first round. They've now actually gone on to become a unicorn, so that number is probably 5 or 10x what they initially saved in dilution with us. And yeah, it's really incredible as well because I think when VCs were looking at them and they were analyzing their cap table, they were just impressed by the fact that the founders owned so much of the business at that stage. And then when they were reviewing what happened, they were like, "Oh, you took money from Uncapped. It all makes sense." And so, I think we love to hear stories like that. And, it's, I think, a really nice change that's happening in this market. Because previously, a company like that, the expectation would be, hey, you've raised one round, you've got to immediately raise another one, because, that's basically the way that we've just believed funding works. And, now there's cool alternatives for, even building a unicorn.
That is such a good news story, and it must be so rewarding to actually see how impactful your business model is for other founders.
Yeah,
Um,
absolutely. I think especially in the bootstrap cases where actually there are so many founders who otherwise aren't able to access capital because perhaps they're building a business that might be overlooked by traditional funding sources. And for us, being able to support those businesses, I think is even more rewarding.
so before I move on to talk a little bit more about your growth journey and leadership style, I just have one other question around the business model. So it's a flat fee of minimum 6%. How do you actually evaluate whether it's more than 6% or less? Is that a function of, well, obviously it's a function of the risk, but is it also a function of the length of time it takes before somebody repays? or
No, so it's a flat fee of 6%. The only difference is about how you deploy it. So, 6% is what we typically will charge for a marketing advance. Sometimes, if you're getting funding for inventory or you need funding in cash, it'll be charged at a higher fee, which just is reflecting, the risk involved and, some of the differences there. But, the fee doesn't change with the time that you hold the money. And, it makes it really simple because, it doesn't have compounding interest or any of those things that you would have had in a traditional lending world. And it also just means that you know upfront exactly what you're going to pay.
and in this business of growing your business, having clarity is key to ensuring your success and knowing what the parameters are in terms of where you're growing. So shifting gear a little, Asher, um, you're a founder and you founded multiple other companies. How would you describe your own personal growth journey?
Wow. Well, I guess, so many entrepreneurs and founders, I think they find it difficult to make the transition from, running a startup to a mature company. But, if you want to make your big idea even bigger, it's really critical to like shift your mindset. You have to, adapt your leadership. You have to focus on critical decisions. And you also have to consistently achieve your goals. And, I think, what I've learned over time was just how to build much more of a scaling organization, to learn more on, which decisions to focus on first, which ones to delegate, to discover more about how to communicate transparently, how to grow my team with feedback, how to create, scaling behaviors, across the organization. And so, yeah, I think I've really evolved in terms of, how I managed my business previously. And I think part of the, early success we had on Uncapped was probably bringing a lot of those lessons and mistakes, to be quite frank, of getting it wrong and, learning about how to do it better.
And in the last year, Uncapped has grown its team size by what, more than 100% or more than doubled in the last year?
Yeah,
Um,
so, in the previous year we were, not too long, maybe just over a year ago, we were like 10 people. And we're, more like 100 people now. So yeah, it's been really a fast journey, being one of the fastest growing fintechs in Europe.
and you're completely remote, or do you have office space?
We're completely remote. So that was one of the key decisions that we made. I think has been really helpful to be able to grow a company like this. Part of our team is in the UK, but we also have team members in 18 countries, and then we operate in 22 countries. So I don't think that would have been possible to be able to get to this level of scale as quickly as we have, without being able to really hire the best people from all over the world.
So you mentioned earlier that communication was really important. So how do you keep in touch with, people in so many different countries? And well, I mean, time is not really a big issue between Europe and the UK, but how do you just keep that cohesiveness or that sense of uncapped culture intact, working with so many different people, and also, as you say, growing from 10 to over 100 in the space of a year?
Yeah, well, I think it's really critical communication because you have to avoid, knowledge loss and also information silos forming. And I think the thing to remember is that, in a remote environment, your teammates need as much visibility into your work as they would have previously had in an office where they could just meet up or listen and chat over lunch and maybe have a beer. And so you have to really actively work on it. It's one of our core values around communication. It's something that we look for people when we hire them, but it's also something we train them on and we evaluate them on. But one of the key things about that is that we had to change the way we work from being speak first to write first. And that's the idea that good documentation, it enables a stronger, more informed, more trusting, and more connected team. And there's a bunch of different ways that we've like implemented that in practice, by thinking about how we change our communication tools, to thinking about how we develop our internal wiki, how we onboard people. But all those things come together to really make communication a big focus. And yeah, I think it's absolutely critical to be successful in remote.
Fascinating, absolutely fascinating. So, what is your normal tool then to communicate in terms of right first? This is my own personal curiosity coming out here more than
Well
anything else. I'm
well,
probably going off
typically what
script.
we would say is, different tools are good for different things that we have to recognize. So, a Google Doc is great for initially forming an idea, for getting quick feedback and commentary. But then if something is, something that, all members of the team should know, if it has a permanent evergreen home, it should be on Notion. And, on the flip side of that, we would use, things like Slack for, day-to-day communication, chit chat and updates, but really trying to, push people where if they do ask something on Slack, which is like a question which would be valuable for other people to know, we encourage the person who asked the question to document the answer then on Notion so that when the next person asks, we can, direct that person to that information. And a
So
general philosophy I have is that if you're going to say something to a second person or a second audience for a second time, make sure to write it down. And by doing so, it just improves the quality of your communication overall, and also saves you a bunch of time communicating it.
fascinating. Such simple tips. And yet, I imagine when it comes to onboarding new team members, it makes that whole process a lot simpler.
Yeah, 100%. It's so funny. People always ask me, I don't understand how you can run a remote company. It must be so challenging. And I always say, I can't believe you run a hybrid company. I can't imagine how challenging that is, right? Because if you build a world where actually you have things incredibly documented and understood, and that information is really transparent to your whole company, when a new person joins, they instantly get all that access to that information, which would otherwise be stuck in people's heads and floating around, and it makes it actually way easier to run a company. So yeah, I'm a really big proponent of remote and really believing that's the future of work.
And tell me a little bit more about delegation, because that's a theme actually that we're focusing on at the moment in Springboard Future. Just looking at founders and seeing that, yeah, you have to give up some control, or you have to be successful in the longer term. You can't be a master of all things.
Yeah, absolutely. And I think, one of my real beliefs as well about leadership is about how to create like a culture where people are really empowered to do their best work. And, I think like the contrast is there's so many companies that have a leader follower model where, effectively there is one person in charge and people take orders from that person. But of course, the truth is when people take orders, they run at half speed. And the solution to that is had to have a leader model where everyone at the company is really empowered to actually be a leader, and recognizing that people actually behave their best when they behave like leaders. And it doesn't necessarily depend on one designated person always being right. And so yeah, we really try to apply that at Uncapped. And I think the biggest way that we do it is that as much as possible, we try not to prescribe to people how they should do a task. We ask everyone to be a leader themselves and proactively create a proposal to drive a task forward driven by metrics. And their manager might discuss the proposal with them and might offer some guidance, but ultimately it's that person's decision to take. And I think with that, it means that that person now is really empowered to actually go and solve solutions and find solutions for themselves. And yeah, I just like kind of learned from the contrast of my previous company where I tried to do the opposite, and I tried to be the person who was making the decisions for everyone. And of course, you only have so much decision making authority left in a given day, right? You can kind of
Yeah.
get to the end of the day and you're like struggling to decide what to make for dinner. And that's because you've just exhausted all your decision making capability, right? And yeah, if you change your mindset and kind of think about it differently about what your role is, it can really make a difference. And to me, I summarize that by saying, I used to believe that a founder's job was to put out fires, and now I believe a founder's job is actually to build fire stations.
Fabulous. Fabulous. So you founded this company with Peter. How has that worked, and how do you complement one another? How do you play to your individual strengths? And has there ever been any friction among the pair of you in terms of the direction that Uncapped will be going?
So yeah, we
Lots of
have
questions.
really different backgrounds. Peter comes from a VC background, and I came from a background of starting various companies. And so I think we really brought something different to it in the sense of being able to understand those two worlds and like connect to our different customers. We have a network of 600 VCs who actually refer companies in their portfolio to us. And, because they're in that same situation where they don't want to be diluted either. And, building those connections, but also understanding, the capital was also a really important thing that really Piotr brought to it because, we're in the business of our product is actually, capital of giving away money. So being able to fundraise is something we have to do so other people don't. And, that can actually be a really full-time job. So, it's been great in that ways. And then, of course, there's always challenges working with your co-founder. But I think we wouldn't probably have done it any other way.
And how important have the accelerators been in your whole growth story? So I know the Tech Nation are a big supporter of Uncapped. I think I read somewhere that you might have had some office space initially in Google. Now I understand you're virtual, but how important are accelerators to young growth companies like Uncapped?
Yeah, in office space wise, we had some office space actually at Seed Camp, who was one of our first investors, and they happened to be in the Google building. So we were there, and it was a cool environment to see, and being sharing desks with some really incredible businesses. Like it was us and Hopin who were sharing
Ah,
an
okay.
office, which was really fantastic, and being able to be seeing their growth journey as well was really really insightful for us. And then, being part of other accelerators, it's more, I guess, like the Tech Nation program. I'm not sure if they would call themselves an accelerator necessarily, but I think about them as being just an amazing set of resources. They gave us, a bunch of different learning opportunities with different mentors and different courses like this, where we just got to, understand different parts of our business and also have members of our team participate in some of those things, whether it was marketing or operations or technology, and really thinking about how do we learn from the lessons of the best UK companies, and hopefully follow in their footsteps a little bit faster.
Excellent. So, one thing that you mentioned earlier that has really resonated with me is the fact that there's no bias in your business model. And I guess when we think about race equity or just what else is happening in the external environment, it's fascinating to understand that here is an opportunity for young companies to seek an alternative funding method that is agnostic to who they are or where they've come from, and really that they have a repeatable business model that can be scaled. That's fascinating. Was that originally part of the purpose, or is that just something that suddenly evolved because of the way your business model evolved? Or did you really, in the initial days, set out with that sense of this is totally unbiased?
No, I think that was definitely the beginning of this because of the idea that when we found this company, there was a critical moment where I think people were starting to question traditional funding sources and start to look at them with a little bit more scrutiny because of historically the pattern matching that has happened. There is real inequity in equity. 0.05% of companies will raise from venture capital, and 98% of them are men. And you can't really not see those stats and wonder what's happening there. And I think it's also a recognition that venture capital doesn't suit every business. For some use cases, it's really silly. Like, if you are planning to raise capital and then turn around and spend that money on Facebook ads, where you already know that £1 in equals, £3 out, it's pretty crazy to give away 20 to 30% of your company in each funding round to support, a situation like that. So there were just some real questions that was happening with VC. And I think that's a little bit what enabled us to, offer an alternative and be able to move and grow really quickly because people saw what we were doing and really liked it and referred more people and more people, and founders really got engaged with it. But that said, it doesn't mean that equity in VC can't be a good thing. It's just another tool in an entrepreneur's toolkit. And for some use cases, VC can make a lot of sense. Like if you're doing R&D, your pre-monetization, your pre-product market fit, and you're taking a big risk, something like equity can make a lot of sense. But there's just so many times where I've seen founders raising equity for something that's actually repeatable and predictable. And for that, I think, entrepreneurs, they deserve another solution. And, that's where we come in.
And what's next on the growth horizon for Uncapped?
Well, I think as you mentioned, the macro situation is changing and is more challenging probably than ever. And I think what we're going to see is a lot of companies who would have probably raised from venture capital will be seeking out alternatives. Like I've been talking to founders even this week where they've grown their company 5x versus the previous year in terms of revenue, and they're being offered term sheets right now, which are down rounds. And you think about that, and it just seems so crazy from where we've just come in the last cycle of fundraising. And so I think, those businesses are really thinking, hey, actually, I can now look at alternatives and actually grow my business a different way. And I think a lot of what we're going to be doing on Uncapped is really trying to support those businesses who are actually great businesses that just need funding, in a different way of thinking about it. So we're excited to, support more businesses like that.
Very good. So before I ask my last question, let me just tell the audience that if anybody would like to ask a question or has a comment, please put it in the chat. So Asher, what advice would you give to up and coming tech founders? One piece of advice.
Well, I think, on the topic of raising money, I think, one question I think always is, should you actually even be raising money today? It's kind of a funny thing to say as someone who, works in the business of, helping founders access capital. But I just think for so many founders, raising a big round has been, the symbol of success as an entrepreneur. And you can't necessarily blame them because, the TechCrunch headlines are totally focused on who's raised and how much. But I think, real success as an entrepreneur is actually about building, a profitable business and owning more of it, right? Even if we don't celebrate that enough. So I think, in the context of raising money, I think that would be the first thing.
Very good. There's a question here. Have you found when looking at data from Zero, etc., that the current economic environment is impacting your clients and your business? Delays in supply chain and rising inflation. And how does that factor into the complexity of funding decisions? So we've sort of touched a little bit on that, but I guess somebody out there would like a little bit more clarity on that question.
Absolutely. It's been a tough time, especially if you're running an e-commerce business. For a while now, through this last period, we've just seen supply chain issues continue to challenge. And even in like the last golden quarter, so like the period to like Black Friday, there were so many businesses who were so frustrated because they were at the peak period of their sales, but they would have, a container stuck on the ocean coming from China, and they were just missing out on those sales. And so, that problem, it still continued because as, oil prices have spiked, it means that, 3PL providers and all the logistics are also more expensive. There's also, because there's less consumer confidence, we're also seeing generally that people are buying a little bit less than they were previously, and they're, reconsidering some of their purchase decisions. So all those things do put a lot of pressure on businesses today. But I think also what's great is there's entrepreneurs who are taking those challenges and making them into opportunities. Like, for example, we have, one customer where they last year got burned by the supply chain challenges, and they went to their suppliers this year and they doubled their inventory order at a 10% discount. And then they were able to secure, the capital to do that from us at a 6% fee, and were able to pocket the difference. So they actually took a challenge and actually improved their margins. And so I think, entrepreneurs who are being innovative and thinking about how they can use capital in new ways can like get through some of those challenges. And yeah, we're really excited to see that innovation happening.
What an exciting note to end on. Yeah, opportunities come to pass, and in times of adversity, there are always opportunities. But actually knowing whether or not you need to fund is a question that business owners need to make. And if you're running a business that's generating 10,000 a month for over 6 months and is scalable and repeatable, then you are a likely candidate to come to Uncapped to look for this alternative form of funding. And when it comes to leadership, it's all about empowerment and communication, and not quenching the fire, but actually building the fire engine. Gosh, Asher, we have touched on a lot of subjects in this last 25 minutes or so. and it's been fascinating to talk with you and learn more about Uncapped and the service that you are providing to other young founders. Thank you so much. I've really enjoyed this conversation, as too I'm sure our viewers have. If you'd like to learn more about Uncapped, then go to the website, weareuncapped.com, and you can always link with Asher directly on LinkedIn. I'm Pauline Egan for Springboard Future, and you'll find on our website access to a lot of resources that speak to some of the issues that we spoke to today, be that through our Virtual Advantage podcast or our regular newsletter. Our next LinkedIn Live is on the 22nd of June, where we'll be talking to a Series C founder, and I hope you'll join us then. But for me and on behalf of Springboard Future, thank you very much, Asher. This has been a great conversation. Bye-bye.
Thanks so much for having me. Bye for now.